Let's go now to our friend BIMnet, a BB from Galaxy Trading. As always, BIMnet, welcome to Galaxy Brains.
Thanks for having me.
So it's some exciting stuff has happened. Just since we last talked, BTC pretty much retraced the entirety of the Grayscale pump from last week, which I think a lot of people kind of expected. The ETF stuff was very anticipated and thus probably priced in a lot of ways. But we also just had another announcement or headline from Cathie Wood and ARK, and 21 Shares are filing for an ETH spot ETF.
Correct.
Just a few minutes ago. It's Wednesday, September 6th. I don't know. Is that a big deal?
I think it is pretty meaningful because we've seen a bunch of ETF like ETH futures ETF filings.
Yeah.
And the logic of the Grayscale versus SEC decision was pretty clear. If you approve the futures product, there isn't much of a difference between futures and spot.
Right.
At least mathematically.
And they said that. They said mathematically.
Mathematically, there is no difference. And so if we're making the assumption that ETH futures ETF is going to get approved, the next logical conclusion is a spot ETF. And much like our guest from last week, Eric, from
James Safer.
James Safer, sorry.
Yep.
I agree. I'm a little shocked that there haven't been more filings for spot ETFs.
Especially,
and I do think it's more likely an inevitable type of situation because all these guys, like, they see each other and then it's one thing after the other.
There was that Bloomberg story, even at this point, a couple months ago, that said that the SEC was poised to not block those ETH futures ETFs. So I'm shocked that the spot wasn't filed sooner, to your point.
Yeah.
You could have filed it right then.
But here's the other aspect of it. I mean, ETH is dramatically smaller than Bitcoin, and there is much more institutional demand for Bitcoin as the story that resonates more with folks. And so I do think that some of the bigger players are just focused on Bitcoin
just one
because
foot in front of the other.
Well, one foot in front of the other. It's also like you want to have products that people want to trade, right? People want to trade the Bitcoin stuff. The demand for the ETH stuff is not in the same magnitude.
Yeah.
Not that it won't be.
Sure.
But at least at the moment when trying to do a cost analysis, I do think some of the bigger players.
Bitcoin.
Yeah, exactly.
You got to do education and get it out on wealth platforms and whatnot.
Yeah.
Okay, so let's talk about other stuff because one of the other macro stories I saw is that the dollar is just really on a pretty big crusade over the last couple months.
No, absolutely.
Really pumping up higher. What is that? What impact does that have? Like, what does that mean?
There's a lot of implications.
Yeah.
Right.
Well, can we start with why? Why is the dollar going up?
The dollar is going up because more folks are believing in a higher for longer stance in terms of interest rates in the U.S. In addition, it's literally like the best house on the worst street, right? Japan is stuck at negative interest rates. There's a property bubble that's bursting in China, and they're actively easing and they're cutting interest rates, right? In places like the UK, you're having a wage price spiral. In Europe, you've had softening of data, material softening of data manufacturing and services, et cetera. Versus here in the US, I mean, we just had an ISM services that just beat to the upside. We had Powell's preferred measure of inflation, which is super core PCE, surprise higher, the week before. And then most importantly, in terms of this last, real leg in the dollar, I think it's a function of like energy prices, right? And we're seeing crude top $88 a barrel, so Brent top $90 a barrel.
Are going to not cut, or they're going to cut more?
No, they have cut. They're committed to keeping that supply off the market. It comes out to like 2 million barrels per day, et cetera. But we're producing oil at like COVID levels right now, and that's on purpose because they have a quote unquote monopoly on energy markets.
Okay, so that's some of why it's been happening. But what are some of the implications of a stronger dollar? I know there was some fears.
So a stronger dollar means that, for any commodity importing nation, that the commodity prices are a lot higher, right? So if you're importing a lot of oil, like oil price went up and the dollar exchange rate went against you. And so it's like doubly compounded. And so for nations that are generally consumers of commodities, it's pretty bad.
Yeah.
And so that's a major implication. In addition, there's a lot of dollar-based debt. And so, the higher the cost of that debt as a function of interest rates going up and your currency rate going against you,
Yep.
that, fundamentally is going to lead to lower growth. In addition, right, like over 50% of S&P earnings are abroad, right? And so you're going to see earnings take a hit just from the FX impact.
Wow.
So if you're in a world where, growth is slowing because of, things like in China, et cetera,
Yeah.
and you are, getting hurt on the FX side of things, I think it's pretty bad for stocks in my head.
And I guess most things too that are, anything priced in the dollar essentially gets more expensive.
Yeah,
And
absolutely.
so that also includes just assets of all types, right? It gets
dollar strength, typically means those risk off.
Yeah.
But yeah, there's a lot of implications, and the question is, like, can it continue? And absolutely, all of the structural forces are there. Like, as long as Japan is stuck in negative interest rates, their currency is going to get challenged. And so, they're out there talking about currency intervention again, right? China's actively trying to defend their currency too. And so it's got, broad-ranging implications. But the beauty about the dollar right now is it's just such a great safe haven play because you get paid to be long the thing. It's positive carry to be long dollars.
right.
And it's a hedge for shit blowing up. And so it's, we've spoken about this before, but
Yeah.
it takes on these unique set of properties that become almost self-fulfilling.
Right.
And so that's kind of where you're at, and you're testing major levels across, tons of different currencies. I mean, Euro looks like it wants to break 107. I think 106.5 was the low on the year. We're talking about 147, 148 on dollar yen. You're thinking about 150 in currency intervention like right now.
Yeah.
I think cable is, an absolute sale here. I think it's like 126 and change. Like it's going to go back down. But then in addition, you're also having, some of the most popular like currency trades in the world, which is long carry and these things like MEX in Brazil. Like those are starting to get unwound now too. And so there's like technical and things that
Weird
are helping,
structural,
helping the dollar. And on top of that, you have, the Fed that seems like they're reasonably intellectually honest. And so when oil prices go higher, right, that's going to lead to increased higher headline inflation and core because, you can't strip out the energy impact. But to give you an idea, the Cleveland Fed nowcast for August CPI is a 0.79 month on month.
Wow.
Right? Analyze that. That's, you're talking about 9-10% annualized on the
lot.
August number.
That's a
that
lot.
doesn't even have like the big spike. Well, it does have a reasonable spike in energy prices, but you're going to get another one in
Right. More is
September.
coming potentially.
More is coming. And so if you're telling me the Fed is going to be looking at 0.79 inflation prints, and they're thinking about ending hiking policy,
Seems
it's
unlikely.
seems so unlikely.
Yeah.
In what world would they have thought they hiked 500 plus basis points, 525 in short order in a year,
I was just going to ask
engaged in QT, and we're a year later and we're about to print a 0.8 month on month headline CPI number? You could make a reasonable case that they're like monetary conditions are not even remotely restrictive right now. Home prices are still holding up well. You've had moderate crack in the labor market, but like people are still spending money. Inflation's still high.
Phineas was just telling me where he lives in Brooklyn, there's more bunch of luxury stores opening up. People are spending money at all luxury stores all around them.
Yeah. Eventually that has to slow. I mean,
you have to think so, right?
yeah, but at the end of the day, we just have to think back to the magnitude of money creation that happened.
I guess it's just there's
It's
still
like
so much out there.
So much.
Yeah.
I mean, you printed trillions of dollars and you sent it directly to people.
They literally mailed it to people.
Literally mailed it to people. It's not like in certain instances.
What's this thing? Did you see this thing about the there was the program where you could get a big funding from the feds if you didn't fire people. I forget the name of this program, but
Yeah.
as an employer.
Yeah.
And like people are still I read a story in the Journal a couple days ago about companies that have sprouted up to help, like consulting companies that have helped sprout up to help employers still be claiming this money. And it's like they've now claimed over 180 billion of this money.
Yeah.
More than double or something what Congress like it's just they're still pumping money. And
They are.
They didn't
No,
even
no,
realize
no.
it. Like,
I'll tell you.
It's crazy. People are still doing this thing.
No, people are still doing it, and like one of my strategists I talked to, there's still a reasonable amount of fiscal impulse left from all these programs and all that money that it's got gets spent over the next quarter.
Right.
Like, which is insane.
They're still spending.
But there's also a lot of fraud and abuse in those programs.
Totally.
And the Fed, and the Treasury and IRS and all those people, they're coming after it.
For sure.
But you're spot on.
But in the meantime, it's out there and it's getting out there still.
Yeah.
I mean, in the IRS stuff, there's remember there was the what do they call it? PPE.
Yeah, PPE loans.
PPP.
Yeah.
Program or whatever.
Exactly.
There was tons of fraud in that. I mean, we
Yeah,
found
I
out.
mean, that's what these-
but that
what
money
these
got out into the economy, a lot of it, right? So,
well, here's the big concept here is that when you stimulate to people that have an insanely high propensity to spend, that money goes into the economy,
right?
And then that money has a multiplier. Versus, when you give money to, let's say, folks with a lot lower propensity to spend, aka rich people,
right?
Then that money
put it in assets.
They put it in assets, and it's got much lower velocity. And so what we did is we did the most supercharged version of it, and we
got inflation.
We gave people checks in the mail to literally
even better. They just dropped them right into your account. In fact, you didn't even need to apply.
Yeah.
I think they used your
IRS
prior
info.
tax info.
It just showed up.
It's ridiculous.
And so there are going to be unprecedented consequences to that. And it wasn't just domestically that happened.
But I agree.
Right?
No, it was everyone did that. Yeah.
It's like, oh my God, in Europe, energy prices are real high. Don't worry. We'll print more money. We'll subsidize the cost. Don't worry about it.
They were saying
there
that,
are consequences.
Yeah.
You make more money. The value of things relative to those dollars will increase because you're just increasing the denominator.
100%. Very simple.
It's super
Very simple supply and demand.
now I will tell you the most important thing we talk about today, I think, in this context, is fiscal dominance. I kid you not. I saw, one or two central bankers getting interviewed about, so Congress is going to, have another, huge deficit. Like, what are you thinking about?
Worse.
Might get worse. What are you guys thinking? Is a shutdown possible?
Right.
Like, what are you guys thinking about the fiscal? And these central bankers stand up there and they're like, we can't control fiscal policy. That is a policy of Congress. So our job is to react to it. But more and more, the one thing I believe about...
That's what you mean by fiscal dominance, that fiscal actually runs the sort of the
monetary... especially when you have a constraint, the government spends so much money that at a certain point, if they were to spend that money and fund it in the open market, it would cause havoc.
Yeah.
And so the central bank has to print money to buy that at a certain point. And at a certain point, their decision making with respect to how they set interest rates,
it's like their hands are tied.
Their hands are tied by the ability or the necessity to absorb that supply. Not tied, but that's
impacted.
Impacted
and the more
materially.
The more it
but
becomes,
that's not an official mandate to accommodate insane
but
levels
they literally
of federal
have to
spending.
do it to control the
Absolutely.
situation.
But my issue is they're so smart. They can see how disjointed Congress is. They can predict deficit spending pretty well. You know what? Don't predict it. Use the CBO's fucking estimates. Sorry. You want to claim that you don't want to, get involved in that? It's fine. Use the Congressional Budget Office and tell me how are you going to respond to that. 3-4 years of, $1 trillion+ deficits. You're not definitely going to be doing QT.
Right. You mean look ahead, right? Don't just react.
And tell us but if they did, then that would cause bigger problems.
Because we wouldn't like what we heard.
We wouldn't like what we heard. But they're all so smart and they can do
it's
math
incredible.
out 5 years.
Oh my God.
That's the predicament all these people find themselves in. And the problem is once inflation's an issue, right? It's only gonna get worse.
They have to act on it.
They have to. So they
gotta. That's why it's so higher for longer. It's real, right? No cuts. No cuts are coming anytime soon,
cuts.
Right?
You got short rates.
They're
short
basically
stocks,
off the table
long
at
dollar.
this point.
I mean, we talked about it 2 weeks ago.
Yeah, we did. Yeah,
short rates, short stocks, long dollar.
BIMNet, this is great. It's just getting more interesting.
I honestly want to dedicate an episode to just
fiscal
dominance.
We need to do fiscal
central
dominance.
bank bullshit. Sorry.
BIMNet, Abibi, Galaxy Trading, my friend. Thank you so much.